session. Thanks for joining us here. If you're new here, go down to the bottom right hand corner, hit that options tender logo, and subscribe. We're going to go through quite a bit of information here, and we're going to end off with we're going to go through SPX, really analyze the indicators, the moving averages, technical analysis, and Elliott waves. And then we'll end off the session with expected move, and then we'll do a little bit of charting on Bynd. We entered a trade into Bynd and just want to show you why. All right, so let's jump into it. We have SPX on the weekly. We named this sentiment can change on a dime because we had a bearish engulfing last week or the week before, and last week just straight back up off the 8MA. We also moved our pivot over now that we have all-time highs. So we moved our pivot over. Our trend line is fresh, and we're still bullish until proven otherwise. Now we're over all the MAs, but we are looking at the MACD. We have not crossed back over to the bullish side. So we still have some divergence, some bearish divergence there, as well as the RSI. We're not quite overbought anymore. So we'll have to watch those to see if we can cross back over and get some more momentum to the upside. Otherwise, we have to think that our momentum is lacking at this point, and we have to be cautious. Okay, so let's move over to the daily. Daily trend is our friend. Let's dive in a little bit here. So it appears we're on wave 5 of 5 of 5. So we want to talk about that being an end of a move, but not just yet. We're over all the moving averages, the 8 EMA, 20, 50, 100, 200, way over the 200. So we're really getting up there. We're just starting to gap up every day now. Checking out the indicators, the MACD, we did have bearish divergence. Now the key here is, are we going to get down to past the 0 line into bearish territory? It doesn't look like it quite yet. Coming off support here, bouncing up with bearish divergence and bouncing again, but this is like a trend line, and it appears we're going to try to break through that trend line, start working our momentum back up, and we'll probably, unless we burn through the divergence and make a new high in the MACD, then we're going to look for just a lower high for another bearish divergence, and then we'll start heading lower at that point. That's how we're looking at it. RSI working the same way, extend this divergence down, but the trend line, it appears we're going to try to break through it. Bounced off of the 40, it keeps us in bullish territory. That's bullish price action. So we have to remain bullish until proven otherwise. Okay. Over to VIX. All right, the VIX, we're still in this huge wedge. We talk about this every single week. We're pushing our way down, just can't get any push to the upside. So we remain bearish on the VIX and bullish on the market. The VIX, for all of you new traders, is a fear indicator. That's what we use it for. We're underneath. We're looking to get above this this resistance here, but we couldn't hold. When the VIX is up, that means we're fearful that the market is down. Okay, so it's I guess it's a inverse relationship to the market. Okay, so this we may look for a new low, but right now, as the market is making all-time highs, we are not making lows on the VIX. So that does create a little bit of divergence. Maybe we look to grab onto support in the 17 area before we start heading back to the upside, which means we'll be watching on the market to the downside. Okay, hope that's not confusing. On the SPY, we want to check out volume. A couple different things, actually. The volume we did increase as we're starting to break out from this ascending triangle, so that's really a good bullish sign. Same thing, we're looking at that MACD crossing over. But what I really wanted to show you on this one was the measured move. So we took a line from the bottom of the of the ascending triangle, and then put it at the neckline, and that's how we get our just a rough measured move to about the 440 area, where we could break out to according to that type of measurement. Okay, let's go back over to the SPX. I missed something there. I wanted to show you that real quick. So this next move here, this is looking like an expanding flat, which means that the first wave has to be smaller than the third wave, which has to be smaller than the fifth wave. So the third wave, we did a measurement here, 100% of the extension from the third wave, means that the fifth wave, at a minimum, has to reach this 4364-ish area. That's a little bit rough, but so that just kind of gives us a plan. If this is correct, that this is expanding flat, then this fifth wave has to be larger than the third. So that's where that will bring us. And also just this wave 2 down has to be smaller than this wave 4 down, which it is. So everything's fitting so far. We'll be looking for this target at least coming in the next couple weeks. All right, let's move over to the ES on the 65-minute. Get down to the nitty-gritty, see what's happening here. We're a little slow on Thinkorswim. Don't like that. Okay, so what do we see now? We're actually working our way in this channel. I'm kind of looking at this as a 1-2. I do believe we had a 5-wave move in here. So that's a 1, possible 2, and then a 1-2. And we're working on a minuet wave 3. So we have some room to go. It's kind of fitting our scenario. We are drawing the trend lines. We have a fresh new up move trend line, but we're really working in this channel. So that will give us a guideline as we're moving up to our targets. We have a few targets up here. We're really keeping an eye on this 100%. That's exactly what we were talking about in the SPX. So we have some confluence on the way up, but we'll keep this every single day. So on that note, hit the notification button so you can receive these videos every single day. We do like to update the market very often. All right, and we're going to end off this part of the section with the SPX on the expected move for the week. We use the expected move. I'll put a tag to the video. We use the expected move in order to let's go back to the daily, like a playing field. So just like in soccer or football, you have a playing field, you have boundaries, guidelines to see what's happening. You have to stay within there. The plays are usually within, and you go outside. That's an anomaly that lets us know what's happening. So you see the expected move has been sideways for so long, and it appears now we're just now breaking out of the range. So that's a really good sign. The volatility really got large here when we started to move down. It was a 90-point move, and this week it actually shrank almost in half, a 53-point move to the upside or a 53-point move to the downside. And after breaking above that 90-point move, that's a great tell of breaking out to the upside. So we'll see if we can continue that move. If maybe we hit the 53 points to the upside, maybe we pull back for a wave 2. Maybe this is a 1-2 down to the bottom edge and test the 20, and then we'll keep heading higher. So there's a lot of things that can happen, but this is our playing field. I will put the video at the definitely at the end of this video. I'll put the link for options expected move if you're interested. Okay, so next, Bynd. I want to show you what's happening, why we picked a trade in Bynd. We're eyeballing this thing for a while. It's been consolidating. Let's start off with some higher time frames here. Let's go to the weekly. On that weekly time frame, it appears we had a 1, 2, 1, 2. Broke down from a wedge, and now perking back up and really consolidating. We had an inside week there. After a great push, so we're consolidating right inside, pushing off the 8 MA, holding the 50. Let's go down to the daily. And why do we think this thing's going to start moving now? So we're in this channel to the upside here. We did do a rough count. We have 1, 2, 1, 2. And how do we get that? Because we had a 5-wave move up, and then an expanded flat, an XYZ there. And so that brings us to the red letters A, B, C correction, right down to a 61.8 retracement from the bottom of wave 2. So that gives us a really good signal that this is a 1-2. And now we're working on wave 3. So wave 3 up. So this is going to be quite the move. We might have at this point, we might have we're working on wave 1. I don't think this wave 1 is over yet, and then we'll come back for a wave 2, but we have some room to the upside before doing that. So anyway, we just closed over on Friday. We closed over the 8 MA and the 20 MA as well. So it was a great push right off the 200. It couldn't break down from the 200, reverse. So we have this flag action that actually worked really perfect with this channel. We regained the 200, so that'll be a good guideline of keeping this trade steady. Plus, we had resistance and once support, and now hopefully we'll use this as support again. Now that we're pushing back above it, but we have to break out of that flag first, that channel. But I also want to show you it worked out actually really good with the I think we had a 4-wave move. Wave 4 is a complex correction, so we had a nice little triangle in there before breaking out and starting to flag. So I do believe this that was wave 4, but now I think from the bottom here of wave 4 to the top of this wave 1, we get a perfect retracement to the 68.1 retracement. So that lets me know that after this wave 4 that we have a new wave 1, wave 2, a minute wave 1, wave 2, and now we're going to start working on wave 3. So it seemed like the perfect setup for a weekly options into next week, and we'll probably look to get a nice gain on that, and then look for more upside coming up. All right, so that's it here. That's our Beyond trade idea for the week. You can check that out if you want to. We do have another one that I'll probably put on the next video for Airbnb that we're also in. That one I'm not as confident as Beyond, but thanks for joining us here at Options Tender, and good luck trade next week. We'll talk to you on